So now let's talk about levels. This is something I know a lot of y'all have been waiting on. What are levels? Why does the market respect and react to levels? Well, there's psychology. There's supply and demand. There's fear and greed. There's perceived value. You know what the number one reason is? Memories. People have memories of getting stopped out, getting in, getting out, whatever. So memories and stop and threshold of pain and everything else, but there's a lot of orders placed at those levels. So most traders look for levels and they really can't see them clearly. Have you ever seen like a webinar where people are drawing support and resistance and they're drawing all these little trend lines and fibs and everything else? And I mean, basically you just sit back and 10 different people could draw 10 different trend lines in 10 different directions. So very painful task. Yes. So the apex edge is all about stacking the odds in your favor. Okay. They give you true insight. So player versus casino. Think about it. One is gambling. One is using edges and probabilities. Do y'all think that, major casinos like Caesar's Palace and stuff like that they lose money, or do you think they make money? They're playing the same game, right? Same hotel, same casino, same table, same game. And they do lose plenty, but they always net out a profit. Same deck of cards. One is gambling, one is using edges and probabilities. Without apex order prints, you don't get the edges and probabilities. And once you see it, you won't want to trade again without it. And you can ask people in the room what they say, and they'll say the same thing. I don't want to trade without order prints because it makes everything so much more clear. Once you've seen it, it's like trying to drive down a highway 70 miles per hour blindfolded, taken away from you. So magnifying glass. So order prints are your magnifying glass into the bars and the market. They're not just a list of numbers, but they're formulas, they're symbols that tell you what's happening and what to look for. That's the whole target. Identify the target, identify, the pattern. Order flow, which I'm sure a lot of y'all have heard a lot about webinars on or seen free versions of and all this other stuff out there. It's just a bunch of confusing numbers. What we do is our algorithms interpret them for you to help you see the target, see the pattern, to know when to enter and exit. It's great to see inside the bar and see all these numbers, but what are you going to do with it? Versus actually getting, whole patterns set up. So let's talk about some of these things that we actually, and, to give you an example, we go all the way back versus seeing this versus all those numbers, because all those numbers are actually behind this. But that's where these I zones and pawls and mini magnets come from. All right, so let's see here. Institutional blocks, or I blocks. They're large orders that are placed usually by institutional, not individual retail traders. They can be adjusted by market. We have them already set free for NQ. They are denoted by a red or green line based on a block of orders bought or sold. So there's a red block right here. So that red line is ice, by the way. It's something different. But there's a red block right here. And there's a big buy green block right there. So you have this big sell. You have this massive buy came in. Market broke through on that a little bit and then back down. But notice how when it did it, it broke it right there, came down, and watch what happened when it came down here. It broke it and came back up to it and went right back down. So very strong levels. You don't get a whole lot of them, but those are I blocks. Those are what those red and green lines are, okay? That green level is an I block. That's what I just discussed. Mini magnets, MMs, are designated by a theme, a thin, cream-colored line. They are a price level of price rejection and attraction, meaning the markets will often push off of them and be attracted back to them like a magnet. So they're positive and negative. They attract positive to, and positive also can push away, just like on a magnet, right? And you can always, of course, change colors of plot lines, but these white lines, just like we saw on setup 3, are mini magnets. So you see how it's pushing off of it right there. It's pushing off, gets pulled back to it, pushes off of it again. This one pushes off, and you think the market eventually is going to be pulled back to that. Yes. And then we got more mini magnets here. Here we got a mini magnet, and we have an institutional block. And then we go down here, and we see that there is magnets here, and magnets here. Okay, so everybody see the magnets everywhere? All right, so you got down what the magnets are. And it's not so much you have to understand how the engine works. You just need to know how to drive the car and identify the buttons that you need to use. Okay. Zones of interest, ZOIs. They're price levels that the market likes and has a lot of participation. The market will often return to and chop around these levels. It's often also where you'll see reversals and things like that, or the big setups come off of ZOIs. So ZOI here, a ZOI there, a ZOI there, a ZOI there, a ZOI there. You notice, and watch, it comes down, bounces off of it, comes down, bounces off of that existing ZOI, pulls back to that ZOI, bounces off of that ZOI, comes back right to it, bounces off of it. Okay? So you see a lot of ZOIs. Okay? Paw prints. Y'all ought to know paw prints by now. They're designated by a color, at the orange color or whatever. At the top or bottom of a bar, it helps identify weak price and possibly the end of momentum of the market. Also a great place to trail stops if you're going for longer moves. So the market responds to paw prints a lot like mini magnets. So right there, you see, you got a paw print right there. You got a paw print there. Weakness of market. Going on up, coming down. We got a paw print there, paw print there, paw print there. So check this out. If you were trailing this, that would definitely be a place you'd want to trail your stop to. If you had a short trade here, which we don't on this specific setup, but let's just say you had a short trade, paw print, you could trail, okay? And you could actually use, pause to trail if you wanted to as a way to move your stops down. If you're going for more than, once you get past that initial launch, like I said, you get 10 points and you want to start tightening up, tighten up. Don't do it right to begin with. You'll just get whipped out. But tighten up. Comes down here, tighten up again, and you would have got most of the move just by trying with paw prints. So pretty cool. Everybody see what paw prints are? Sweet. Okay. So now we got deviation levels. Deviation, these are not standard deviations. People have heard of standard deviation before, right? Like the, 70 percentile expectation move, the standard deviation. Our deviation levels is a formula that I've written, wrote it a long time ago, and it's based on implied volatility. It's based on not how far the market has moved, but it's forward looking. It's derived from implied volatility of option pricing. Okay? So derived from implied volatility, which is an IV, or implied volatility is a fancy word for expected movement. So think about it. Do you think there's a lot more volatility when a 16-year-old boy gets a car and gets behind the wheel versus a 40-year-old driving? Which one is going to have more volatility, the 16-year-old boy or the 40-year-old driver? Not a rhetorical question. Who's going to be a more volatile driver, 16-year-old boy or a 40-year-old? Okay. So, if there's more volatility, do you think the insurance company is going to charge the 16-year-old more than the 40-year-old? Or John would say, I'm the 16-year-old. Thank you very much. Yes, I'm a very volatile 16-year-old driver. So they're going to charge them more because they expect more volatility. Well, options cost more when they expect more movement. Like right before earnings, options get more expensive because they expect a big movement from the earnings release. Same thing happens in the market. The option prices of the market get more expensive. And so what I do is I have a mathematical algorithm that pulls out the implied volatility of the options and then ties that into the market putting their money where their mouth is. And it tells us how far we expect the market to move that day. And so those levels are a 0.25 and a 0.5, 0.7, 1, and then we even have like 2 and 3, which is really rare, but it does happen. But they're very strong levels. So, and you'll see like here, these lines right here, these are deviation levels. Where it says like -1 dev, -0.7 dev. Okay? Deviation levels. And you'll notice that 0.25 can be a very strong one. This is something that a couple of our traders have really picked up on, so we added them in. And look how this thing's just bouncing between settlement and 0.25. Right there. Wouldn't it be nice to know that that was a 0.25 dev and that you could actually use that as a level to play off of when you're trading? So an ICE indicator shows, let's talk about ICE. So next indicator. Everybody understand devs? It's expectations of movement based on options that feeds right into your Ninja from our server. We good there? Okay. I'm just trying to help you understand the parts of the chart. The ICE indicator shows its value area. Have y'all heard of value area before? It's pretty common. I didn't invent it. I did change it to be more accurate based on when market closes. I also made it to where it could actually do it on Forex using futures volume, something nobody else has done. But it's basically just value area. It's where 70% of yesterday's volume occurred. Top and the bottom, and then the center line, the blue line, is where the most volume in that zone happened. So there'll be ICE lines and there'll be a histogram. So let's look at that. So if you look at this right here, this shows you between this blue and red, this is the uppermost of the 70%. This is the lowermost. This is where 70% of the volume occurred the previous day. Okay? This green and red line. And the most volume of the previous day actually happened right here at this level, at this blue level. If we go over here, the previous day before that, 70% of the volume happened between this green area and this red area, and the most volume happened at this price level right here. And we'll often see the markets go up and respond to those levels from the previous day, which are also happening to coincide with 0.25 devs. You'll also see a histogram going out, and this shows you where there's really high volume nodes. You'll notice yesterday there was a whole lot of volume right at this level, and look where it comes up to and stops. Comes down and comes right back up to that area and stops. Okay? So that's basically volume charted all the way across for you. So pretty simple. Everybody got it? It's a level, you can identify it, you get an idea of what that line stands for. Cool. All right, we got Flux Pivots, which are also part of the silver group, and they're dynamic support and resistance levels. So instead of just having pivot levels, these actually can change throughout the day. If you watch the second setup video, I show you how to add Flux Pivots to the 60 and 240 minute charts. I only adjust them at the beginning of my trading day. I don't look at them again after that until the next trading day. Okay, I don't adjust my 60 and 240. I don't give more weight to 60 or 240. Okay, so make sure you watch that second setup video. And you plot those on there, and then we also have them on the diagnostic charts. So again, they're plotting, basically pivots that are constantly moving versus static. And we have them on smaller and larger time frames, like I said, the 60 and 240 that we globally draw onto the chart. So right here, you can see the dynamic ones on the chart. And you can check out how, boom, hits right there, comes off of it. Comes up, hits this level, comes off of it. So y'all can see how these levels can actually become really helpful. And you can easily go through Flux Pivot levels. What I really like about the flux pivots is when they highlight something. Like, see, like this one highlights it, and check it out how there's a magnet here, a paw here, a magnet there, and like it helps you really see backwards. Do you see that? That's the real value that I give to the ones on the dynamic, is when I can see them like lining up with multiple other things, not by themselves. And yeah, they're very, very accurate, and they will really help you see when things line up. Because we, as a trader, we're trading right, but we forget to look left. And so they will really help you learn to look left. Okay? And then we also, again, draw them on the 60-minute charts. So, and I have you globally draw them so they'll plot on your chart. And we do it on 60, and we do it on the 240-minute chart. Now, something else that we've just added to the Sniper Setup Silver level is dynamic volume magnets. And if you upgrade your toolkit now, it is included, and it has the template built in. So let's look at that real quick. You want to check that out? What this is was like a dream I had for a long time to actually make this thing happen. Because I used to do it manually. So it was a big process. And let's see here. Let me find my control center, which I think is hiding behind the PowerPoint is the problem. Where are you, control center? Or it's behind the chart. Hold on. No, I want that one. Give me a second. Oh, Ninja's locking up because I got 5,000 things open at once. So hold on a second. We may have to come back to that one if I can't get it to respond right now. Anyways, I'll give you the summary, and then we'll come back to it. I'll do a short video for you, and I'll put it up. How's that sound? Need to do a short video on it anyway. Now we're going to be stuck with that. Let's see here. Hold on. I'm not going to have that little message on top of my... screen for 10 minutes. So 1 second. It's like it's still running in the background, but it's like catching up on something. Oh, it's some like API status message. That's weird. Okay, whatever. So dynamic volume magnets. So what are they? Okay, they're extremely powerful. What they are is it's the literal like third deviation level of high volume bars. Like it's the 3% highest bars that took place in what I do is the last 20 days. And it will automatically plot the levels at where the 3% highest volume happened at those price levels. And I globally draw them. So I'll make a video for you on that, and I'll put it up sometime tomorrow. Okay? Again, I look on 10-minute charts 20 days back. Okay? The only time I go further back in time is when we're like making new lows that we haven't made in the last 20 days, and I have to go further back to get, levels. And like I said, I'll make a bonus video for you. Just not the time to do it. But there is a template in the toolkit. You can go right now into the brand new toolkit that we just uploaded today, and you can go File, New, in Q12, 10-minute chart, 20 days back, and there is a dynamic magnet template in there for you now. And it'll be like space underscore underscore, you know, so that would be with all your other sniper stuff. Okay. Now, what about NQ walls? This, if you haven't figured it out already, which most of y'all do know, they are the most powerful levels. This is how we say the market's going here, and it goes right there. We did a whole conference on this called All In, where Lori taught how, you know, she and us come up with these walls. And we used to have to draw them all manually, but we got our programmers to make us an online database where we could type them in and they would automatically draw on your charts. And all you have to do is add the NQ walls indicator into your chart to do that. Okay. There's cyan dotted lines. They can also be some other different levels as well, other different colors, but they'll always extend all the way out to the right. And they are historical levels where big moves start, and markets are highly, highly attracted to these levels. They are the strongest levels. They're based on institutional controlled reversals, TBS power trades. I can get real complex on it. If you want to go watch the all-in course, be my guest, and learn how to do it. But the market respects these levels, and they respect them often, months and months and months, really years upon years. So like, you better be respecting Lori because she's put a lot of hard work into these. So you see these lines that are coming all the way out to the side right here? These are these cyans. These are walls. Okay, notice Xbox trade coming right off of a wall. Xbox with a trapped order. Comes right back up, goes right to another wall. Xbox with a trapped order. Takes off. Okay? And so just, you'll learn as you start watching them, you'll be amazed. And that is, when you want to know how do we call it and say where the market's actually going? I've heard people go, I know where the market's not going. Well, that's a lot of use. Go to a high risk binary. I want to know where the market's going so I can make some actual cash, right? So if we were long on this and we were trying to, I said, Lori, where is this going? Well, she's like, well, first it's going to hit settlement, then it's going to chop around a little bit, then it'll go on up to 82.36. Our next level is going to be 82.43. Like, I mean, you just call it right out like that. And now you actually have those printed on your chart. So breaking through settlement. Where are we going, Lori? Oh, it's going to go ahead and drop on down to about 81.88, right where the level's at. Look at that. Bam, 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 bam. Okay. Game's down, and now support became resistance. All right. You know, an Xbox trade's coming off of it as well. Another Xbox trade right there. Now, can you see all these levels on your own without these Apex tools? Can you see these walls? Can you see these zones, these deviation levels? Can you see these walls? I'm being serious. Can you see these levels on your own? I can't see them on my own. Yeah, it's. Remember I said, like, without having this would be like driving 70 miles an hour and blindfolding yourself? Well, that's sort of what this chart looks like compared to this chart. Okay? Just naked blind trading. That's what John calls it. So yeah, support and resistance is way too subjective. So this is order-based. This is tick-based information. This is us taking all those numbers and actually making something out of them. So let's talk about putting it all together. What do you do with all these lines on the chart? Because it seems like there's a billion lines and I'm just intimidated, right? So I need to be worried about each and every little line. Anybody ever ask yourself that? Like, should I worry about this one? Should I worry about that one? What should I do? What should I do? Yeah, that comes up, right? A single line is something to be aware of, but it's not a wall. It's not a level, okay? Major walls and levels are made up of multiple lines, and this is the biggest area of confusion on walls and levels. Pay attention, okay? You are looking for the stacks. You are looking for the stacks. This is what everybody gets wrong. You are looking for the stacks. Longer term trends versus scalping. Okay, let's go into this. A single twig you can break. But if you put a whole bunch and bind them together, they're not easily broken, right? Am I right? Is it harder to break this group than it is a single one? Is it harder to break just a mini magnet than it is a mini magnet that has a paw on it, that has another mini magnet that has a ZOI? Yeah, it's a lot easier to break the single mini magnet. Okay? Let's put it another way. You can step over a single row of bricks really easily. Right? Anybody should be able to step over this. This, not so much. It's a wall of bricks. It's going to have to climb over it. I mean, you can't get over it, but you're going to have to climb over it. All right? It's going to take some work. So let's look at some of this. You know, single brick. Some magnet right there. Went right through it. Okay? Stacked row. You got two paws, and you got a 0.25 dev, and you have a cluster. There's a stack. Yeah, three paws. Definitely a stack. Single row, stack. Okay? Up here, we got I-zone. We got a mini magnet. We got a paw level. All right there together. That is a stacked wall. Bar comes up, boom, hits the wall, comes back down. Now we form a ZOI. We got a mini magnet, another mini magnet. We actually call this a burger because it's, well, the mini magnets are the bread and the zone is the meat. Comes right back up to it, bam. Comes right back up to it, bam. Okay? So you can call it confluence, but it's stacked walls, which is similar to confluence. Wall level. Look at all these big institutional I blocks. Boom, boom, boom. And an I zone. Okay? There's a stack. Here's a single. Hey, no problem. We got a nice little trade off of it. There we go. Go down here. Can't break it. Can't break it. Can't break it. Can't break it. Okay? It's harder to break. So if you're going short, do you want to go short right into a stack if you don't have room to get at least 10 ticks? No. What if you get a long off of a stack? Do you like that? Or buy or sell, like to buy off of it? Yeah, that's good. Often that can turn into a great trade. Okay? I'm not saying they're required. What I'm trying to get you to do is pay attention to the difference between, because people get so confused about every little level, and I'm like, quit obsessing and pay attention to the stacks, because this is where people get confused and mess up. So settlement is a level, and be aware that on settlement things will move around, but usually you'll have other stuff that'll line up with it too. Let's see here. And then we go on and we look at this. And we got, two mini mags come down here. It hits it. And I mean, you got paws like just sort of coming through. And then all of a sudden they come together. A paw, 1, 2, 3 mini magnets and a ZOI and a deviation level. Boom. Hits it. And that still exists. It didn't just go away. But now we still have 0.25 mini magnet and a ZOI. Comes down, hits it. Comes down, hits it. Comes down, has a new paw, hits it. You see the stack versus just the single level that it broke through? I just want to make sure y'all are getting this, because this is where people get lost on levels. They look at every dang little line and try to give it value and meaning, versus learning the value of these levels is learning to look at the stacks. It's their biggest value. Okay? Otherwise, it just looks like a bunch of cluttered crap, to be quite frank, if you don't understand that. Um, Now, with all that being said, the one thing I am going to make you aware of on setup 2, okay? Not setup 1, not setup 3, 4, and 5. On setup 2, if there's like a level before your 10 ticks, just even a single twig, and I can't get my 10 ticks before I get there, then I'm probably not going to take the trade. So like this trade right here, which would have been a setup 2, a box, an X box with a trapped order. I don't have 10 ticks between here and here. I'm not going to take that one. Now we pull back down. I get another X box with a trapped order. I got 10 ticks. Does that make sense? And that's for setup 2. And notice I'm talking about 10 ticks versus 10 points. We're going for those bigger moves like on 3, 4, 5. We're not worried about twigs. We're not worried about bricks. We're worried about walls. And we also expect the market to be attracted to those walls. Is this coming together for you? Like I'm hoping I'm bringing some clarity to you on all the lines and levels where you don't feel like you get stuck in analysis paralysis, second guessing every single trade. Some of y'all are getting it. Some of y'all are really getting it. Some of y'all are like, I'm getting there. All right, because I mean, I've tried so hard with this course to not make it complex, and Lori and John have sort of helped keep me accountable in that process. And so that's why I was like, okay, setup 2, I want to talk about this one piece. Good. And if you're in the room, you'll get there a lot faster. So, I mean, we've got a lot of positive feedback in the room. By the way, keep staying on because we are giving away a free year of silver here in a minute. Divergence. When the price of an asset is moving in the opposite momentum in opposition to momentum and volume. So we talked about this last week, where it can show, exhaustion, pause, retrace, reversals, marathon. Like you're on a marathon, you're running uphill, but you're running out of steam every time you keep going up another hill. Okay? And essentially make it really simple. When the market goes further on less momentum, it's more likely to reverse. So I just want to do a little review. Price goes further, volume and momentum are less. Higher highs on less. Lower lows on less. DR or deviation reversal, that's the little green and red indicator at the bottom. Or OD, those are the big numbers that print, oscillation detector. So we know divergence is really powerful for showing exhaustion and weakness. And so I want you to notice as this market is dropping, notice how the DR is showing more, and it's dropping, it's showing more, it's dropping, it's showing more. Like that is momentum. It's going further down. That's confluence. That's saying, yeah, this thing's continuing. Okay? But we go over here and check this out. Market goes higher. And right there we got 20,000 versus 7,000 versus 2,000 on less volume. We also look over here, it went higher, and then all of a sudden it dipped down, and it went up a little bit and dipped down. It's like it had like a big hill and then a little hill. But this thing kept going up. That's DR divergence. Went up, big hill, and then it went further, but little hill. That's divergence. So we had divergence. Not only did we have it up here on oscillation detector, these big numbers you see printed at the swing points, but we also had it on the deviation reversal detector. This is like my deviation levels, but this is intraday deviations. So happening live. So this can really help you see like when there's a divergence, and look, we get an X box with a trapped order. That now lets me go counter trend. We're going long. We get an X box with a trapped order. I got divergence on OD and I got divergence on DR. Now I can go counter trend. Okay, and that's when we get to go counter trend. Hey, Ben, can you check your Skype, please? Does that make divergence make a little more sense for y'all? The horizontal ones are for a different system of how far it has to break. So you don't really have to worry about them. So, okay, so the market went higher. Like the market went up here, right? And we got 20,000 in volume in this trend, right? And then we got 7,000 in this trend, and we only got 2,000 in this trend. So see that's 20,000, 7,000, 2,000. So y'all see how it's going higher and higher and higher on less volume? Does everybody see that? Should the market keep going higher on less volume? Or do you think that's, I'm in a marathon, I'm running, and then I go up the next hill, and now I'm getting tired. Now I'm getting tired, more tired, and then I fall. Okay? So, I started off on the marathon, and I was going full pace, full speed. And then I went downhill running, and then all of a sudden I went back up the next hill, not quite as much speed. And I went downhill, went up into the next hill, really losing it. I'm completely exhausted. Okay? That is divergence. It's going further on less steam. Is it making more sense? Just like if you were physically running. All right. Now, we sort of got the opposite happening down here, okay? So I'm running uphill, and it goes down, and then I'm running up again. We'll see, this is your steam meter right here. So I'm going full steam, but instead of having a number, a little histogram. And it gets a little weak, and I come down a little bit right there, and then I go back up and make a new high, and I lose my steam again. And I didn't have as much steam here as I did here. So running up, losing steam. Running up, losing steam. So whether it be on DR or whether it be on OD, that's divergence. It means expect the market to reverse or pull back. And we get a X box with a trapped order right there. On less steam, take it against the trend. We get an X box on a trapped order right there. We got OD divergence and we got less steam on DR. Take it and go short. Most traders lose money because they go counter trend because they don't know when the market is running out of steam to know when they should actually fade the market. They just are going, it can't go any further than this. I have a level. Well, what does the order say? Does it have energy? Is this coming better, a little better together than last week? I know some of y'all got confused. Good. I hope so. That's why I want to do a little review of this today. So, we want to stack the odds. Gambler player, gut emotion, no real system, doesn't know how to read the table, doesn't have good risk management, gambling, or a dealer. They have levels. They have divergence. They're doing sniper trades. They're very focused. They're stacking them all in one. They're putting everything together to have the edge and the probabilities in their favor. And I think the results can speak for themselves. Like I said, we have 38 out of 38 trades in the last 7 days that were profitable. We called in the room. Yeah, I mean, there's another example of divergence happening right here. You got 21,000 up to 15,000 right there. It's going further on less steam. Get the X box with trapped order, fade the market. And then we got this little heel going up, and then it gets down, and then a little weaker, less momentum. It drops. And you think a sniper, they put it all together, right? Not only do they have a target, but they know what the temperature is. They know what the wind is. They know the weight of their bullet, right? They know everything that's going to impact, what the heat of the sun may actually, everything that can impact their shot. And so you become more like a sniper as you're able to put these things together. But our goal is to make that really simple for you, which is where order prints and levels and then the stacked walls come together. Yeah, I don't care if they're white or yellow or black. As far as OD is concerned or otherwise, we compare them, to each other for the OD. So y'all are messing with me. All right. Sign up potential continuation of a trend. Hidden divergence, okay? This is the opposite of divergence. It basically tells you when the market's going to keep going. Divergence is more on less. Hidden divergence is less on more. So let's look at what I mean by that. It's basically more volume, more momentum. It's like I'm getting my second wind. I'm getting my third wind, okay? So the market over here is going down, and we got more volume, 3,800, and then 8,400. Like, it's just, and then we got an Xbox right there, right? So, and we got another Xbox right there. So that just gives you confirmation, that gives you confidence to enter that Xbox trade. Because the market is like, I'm just getting started, okay? And if you look at the top side here, which is a little bit different than the bottom side for reversals, you notice how it goes from 3,000 to 7,000 to 8,000. By the way, it went from 1,700 to 3,000 to 7,000 to 8,000. It's like, yeah, let's go. Oh, I'm come on, bring it. Come on, bring it again. Let's go again. And it's just adding confirmation to that Xbox with trapped orders. Y'all get it? Like, just getting started versus running out of steam. One of them tells you it's going to keep going. One of them telling you it's going to go the other way. A trapped order is, don't worry about understanding how to take apart the engine. It's the blue block inside of the Xbox. So hidden divergence, pullback, turned to 4 times the volume, but did not reach beyond it. So we got 300 and 1,400. Got an Xbox with a trapped order. Okay, because this almost looks sort of like a trend reversing right here, but that number right there tells me this thing is going to keep going because it's picking up steam. Boom, let's go again. So it has a lot more steam than that last up pull, and that had more steam than that up pull. So boom, boom. And also we had a star, low volume score, Xbox, trapped order. I mean, let's go for it. Okay? And where do we go down to? Where we start getting some stacked up stuff down here. All right. Hopefully y'all are picking up what I'm putting down. Another hidden divergence. We got 1,400. We're going up 1,800. 6,300. It's not done. That gives me confidence on that triple dipper to keep going. Right? The triple dipper right there. We're above 75%. Yeah, let's take it. Let's go for it. Market's saying it isn't done yet. And notice I'm looking at the opposite side. And it's at a stacked level. Look at this. We got settlement. We got paw prints. We got all this stuff going on. And we get an entry. Putting it all together. Trying to give you all a second to absorb. So we've taught the individual pieces. We'll keep teaching more. We're going to do a big order prints webinar next week. Okay. And going into reading the markets. But now you're learning how to actually combine stuff, put it together. You're learning how to take your trading to the next level. You're learning how to become the sniper, not the target. You're learning that without the Apex tools, you're really trading blind. I mean, can you really see yourself pressing a button to enter a trade without these tools? Like, do you want to do that anymore? Once you've done that, once you've seen the results you just had in the past, say, week, So again, highway blindfolded. So exactly. I mean, y'all are all on the same page. So, and this is the next level. This is very powerful, and I want to challenge you to share it with your friends. I'm hoping that y'all will not only have enough confidence now to place your own trades, but you actually have enough confidence to say, hey, you should actually check this out. And we are actually giving away a silver annual membership to those who are sharing our post and liking our post and commenting on our post. And so I wanted to go ahead and make that announcement. I want to thank everybody who put effort in on it. And this award, being one of our users, again, they're going to get a free silver annual membership, which we charge $2,000 for. So drum roll. I don't have my drumsticks, but is Blackadder Hayes. So Blackadder Hayes has been very active on our Facebook page. He has shared like crazy. He has commented. He has posted. And he just got a free year of silver annual elite at zero cost. Pretty cool. Now, and by the way, I activated that for him right before the webinar. We're going to give away another one in 2 weeks. And we're going to give away a lifetime as well. Okay? So how would y'all like to know how to get entered in that contest? Because it's really simple. Would you like to win a free year? And by the way, if you end up buying during like our Thanksgiving promo for Black Friday week and you win, we'll refund the money right back to you. Okay? Because we are having a big Black Friday promo starting Monday. So, if you want to know how to win a lifetime membership, you got to join our Facebook group. Okay? And all you do is join it. That gives you one entry. Okay? And then invite people to join the group. And anybody else who likes it. So the futures, I think now says forks in because Nadex won't, or Facebook won't let us fix the typo for like 20 more days. But right here's our Facebook group. You join that, and you can invite friends to like the group. Invite members like right down here. You can invite people to it, okay? And for everybody you invite that accepts, that's another entry into a lifetime membership, which it costs $4,000. Okay? Now, if you just go to our Facebook page, we're also so we're giving away a lifetime, but we're also giving a 1-year membership. Okay? So our Facebook page, let's see here, just go in and type in Apex Investing. One, like the page. Okay? That gets you in. 2, every time you like a post, and we have memes and all sorts of posts and all that, just start scrolling down. Like a post, share a post, or tag a friend in a post, okay? Every time you like, share, or tag a friend, that's another entry, because we can go back in the back end and we can see all the activity and who's doing it. So if you like it, if you tag a friend in it, or if you share it, if you did all 3 on one post, that's 3 entries. If you did it on 2 posts, that's 6 entries, okay? And then another way is if y'all are, having fun and you're doing well, hop over to our forum at forum.apexinvesting.com, and this will get you another entry. And we have an area called You Can Do This and Why You Should, and just post a topic and just say, how are you doing? And we'll give you another entry on top of it. Okay, so all you got to do is like post, comment somebody's name, share a post. You can literally get hundreds of them, and we have tons of memes. And we put up more and more, and some of them are actually pretty funny. So, but I was like, some of you think you don't need to be in the elite room. None of my business. Exhaustion and a paw before I had my first cup. We got SpongeBob, we got The Rock, we got just about everybody. So Ancient Aliens, Invented Order Prince. So, but anyway, so we put those up there. It makes it easy for you to share. And if y'all have any questions about the contest, let us know, but it's pretty simple. Y'all like that? In 2 weeks, we'll announce the next winner, okay? And why are we doing that? Because it's a lot cheaper for us to give you free access for referring people than it is for us to pay a whole lot for advertising. And I don't think that you're going to refer us to people unless you believe in the product anyway. So yeah, like, share, tag, everything. The more you do, the more chances you get. All right? So complete the training course. Be in the elite room. Demo trade. Get going live. Fund your account. By the way, check out our Nadex signals. We haven't had a losing day this month. And we have the live stats right on the signals page. We want you to be profitable as soon as possible. So start to look at these pieces. Start to put them together. Sign up for Thursday's webinar if you haven't already. All the webinars are on the bootcamp page when you sign in on the Sniper page. By the way, reserve your spot. We have 770 people already signed up for bootcamp. These webinars are getting very, very full. Okay? And go to webinar only lets us put 1,000 people in one webinar. So you do want to go ahead and grab your spot. I will see you in the elite room in the morning. And I want to thank everybody for their time this evening. And I hope y'all have a great night and a great morning tomorrow. Our Nadex signals, just hop on our homepage at apexinvesting.com. Scroll down a little bit past bootcamp, and you'll see Nadex signals. And you click there, and it shows it. If y'all did not get any of your questions answered, okay, I want you to either hop on. I hope you got them all answered. But if you didn't, hop on our website at apexinvesting.com, and you can submit a chat. And either we'll get to it now, or we may go to sleep and get to it in the morning. But if you have any questions that are not answered, I want to know. And again, I'm calling everybody personally, so if I actually call you, you may get a voicemail if we're just sending out an update. But it's sort of funny. Some people are like, is this really Daryl? And I'm like, no, this is a robot. They're like, But I'm actually trying to call and get a hold of everybody. And if you want to talk to me, give me a call. I'm here, okay? Don't give me a call in the morning because I'll be in the room. But after about noon, I'm usually available for phone calls, okay? So I hope you all, again, have a great, great evening, and I'll see you tomorrow morning. Thank you so much for your time on the webinar and for trusting us to help you accomplish your goals and dreams.